There are two big things that are about to happen to the US economy that nobody is talking about. These are hands down two of the biggest stories in the economy right now, and for some reason nobody else is talking about. Now remember, there are going to be two things that are going to happen, and the first one is the US government is going after every single 1099 contracted worker out there, and they are going to try to change them into an employee. Now, this isn't just going to affect gig workers out there, it's going to affect the entire 1099 industry. If you receive a 1099, you may be on the chopping block. We're talking about truckers, Uber drivers, home care workers, construction workers, FedEx workers, Lyft drivers, food delivery drivers, medical supply drivers, and nurses. That's right, these contracted workers don't receive any type of federal benefits like workers' comp or unemployment benefits. And some of these big companies, I'm not going to say any name, FedEx, are one of those companies that is taking advantage of this entire system. So these people don't have the ability to get workers' comp or unemployment benefits when they should in fact be an actual employee, and that's saving these companies thousands of dollars, and the US government's basically saying enough is enough. And this is also why you're seeing a huge surge in layoffs in the tech sector, in my opinion, because the tech sector has the largest amount of 1099 contracted workers. Take a look at all these layoffs.
Actually, layoffs hitting the tech sector recently. Nearly 24,000 workers have been laid off this month alone, that according to the tracker layoff.fyi. Now,
over 180,000 people have already been laid off in the US economy in the tech sector. That's just the tech sector. People are getting laid off all over the place. And a lot of people aren't talking about the fact that it's because they're contracted workers. Either they're going to become employees or they're just going to have to let them go. Because if businesses have to turn these contracted workers into employees, it's going to cost the businesses even more money. Companies just can't go from no employee benefits to having to give all of these contracted workers benefits. It's going to cost business owners a lot of money that they may not be able to afford. This new rule is set to take effect on March 11th. We are literally one day away. Make sure that you stick with me because we still have not got to the second part of this video that is super important that nobody is talking about. Now you're probably wondering, so how do I figure out if I'm affected if I'm a 1099 worker? Well, there are 6 factors to determine whether you are not a 1099 contracted worker. It's called the multi-factor totality of circumstances framework for analyzing independent contractor statuses. That's crazy. I know that was really long, but that's exactly how they do it. Now there are 6 different factors. Let's go over those. Number 1, the worker's opportunity for profit or loss. Number 2, investments made by the worker and by the employer. Number 3, the degree of permanence of the work relationship. Number 4, the nature and degree of control over the performance of the work. Number 5, the extent to which the work performed is an integral part of the business. And number 6, use of the worker's skill and initiative. Another easier way for you to actually figure it out instead of going through this crazy list is to know that if you are economically dependent of that actual contractor gig. So if you're working for one specific company and then you don't have any other side gigs besides that, then guess what? You are economically dependent of that job and you should actually be an employee with employee benefits. But as another example, if you actually drive for Uber and only Uber, then guess what? You're economically dependent by them and Uber has to make you an actual employee. But if you work for Uber, then you work for Lyft, and then maybe you do some actual food deliveries on the side, then guess what? You're not economically dependent and you can actually in fact be a 1099 contracted worker. I seriously believe that layoffs are going to continue to rise as more companies are going to be forced to lay off contracted workers because they just simply can't afford to make them into employees and have to pay for all those unemployment benefits. And you're going to see right now, we are currently seeing that this is the highest level of layoffs and that we have seen since February of 2009. And that number unfortunately is going to continue to grow. So everyone out there needs to prepare and needs to understand what you're up against. So please pay attention to this. And if you have any questions, don't be afraid to ask in the actual comment section because I'm going to answer them as best as I possibly can for you. Now you have to look at this from a crazy historic perspective. This was the worst February since 2009, which saw 186,000 announcements as the worst of the financial crisis was seemingly coming to an end. They thought it was coming to an end and it didn't. That financial market bottomed the following month, paving the way for the longest economic expansion on record, lasting until the COVID pandemic in March of 2020. Last part's the most important. Now, if you remember, this is all going to take effect on March 11th, correct? Now, another big thing is going to happen on that same exact date. So on January 24th of 2024, the Federal Reserve Board announced that the Bank Term Funding Program will cease making new loans as scheduled on March 11th, 2024. Now, a lot of people don't understand that this has been propping up a lot of banks and allowing banks to actually survive that don't have enough cash flow. Now, when the Silicon Valley Bank collapsed, the Federal Reserve stepped in and they created this loan program for all of these banks. So if the actual banks didn't have enough money, then they could actually borrow the money with actual lower interest term. Now that program is coming to a complete end. Now the crazy part about this, as of January 17th, these banks have borrowed over $161 billion to keep them propped up. And as soon as all these banks knew that time was running out, they all went to apply for as much as possibly could, increasing it. In the last 6 weeks, they borrowed $5.6 billion in the most recent 6 weeks. That's insane. Look at this chart that I'm gonna put up on the screen here. The bank borrowing wave from the Fed surges. Look at how they surged and they continue to climb into 2024. When all these banks knew that this program was gonna end, they all ran to go apply it as soon as they possibly could to try to get as much money as they could for their banks. And as I said in my previous video, banks are gonna have no choice but to tighten up lending. They can't just be giving out loans anymore. It's gonna make it harder for people that have bad credit. You need to work on your credit. I cannot stress it enough to you, because you are not going to be able to get a car loan. You're not going to be able to get any type of credit card. These banks are not going to have a choice anymore, because the interest rates are going to go higher. And guess what? Now they don't have anybody to back them. They're going to be burning so much cash with these high interest rates that they're not going to be able to give anybody with bad credit any type of lending. This bank borrowing wave that I showed you in that chart and how it spiked is a really crazy example of how banks need that money. They know that they're going to be in trouble and they have to get as much money as they possibly can in the shortest amount of time. And the banks that are going to suffer the most are going to be the smaller regional banks that don't have that consistent cash flow of deposits coming into their bank. That's where you're going to see a lot of these smaller regional banks are going to start to tumble and they're going to go under. And imagine, just like in the last video I said, they're cutting out late fees. These regional banks need those late fees. They don't get those late fees, guess what? They don't have any cash flow. So this is another thing that you need to pay attention to. So much is going to change. March 11th is going to be, to me, it almost feels like doomsday. I'm not even lying. It's crazy to think that we're just in March. And once this employment rule kicks into full swing, we're going to start to see employers start to actually lay off more people because they can't afford to make them into actual employees. They're going to be really heavily relying on actual AI to help them run their businesses. They're going to be searching for people overseas to help them more. This is going to be a huge shift in the economy for employment. And then on top of that, we're going to witness a lot of regional banks collapse and go under. This is going to be a crazy time, and it's only March. This is exactly why I stress to people, go with a bigger actual credit union that has more members. More members equal more deposits, more security of an actual credit union that actually has the actual cash flow and the deposits to back all of those loans that they're writing. Unlike these reckless big conglomerate banks out there that are writing loans that they literally don't have the money to cash these checks. It's insane. They're basically giving away money that doesn't exist. But if you're with a larger credit union, again, larger credit unions equal more members. More members equal more deposits into the bank. Work on establishing those relationships with those big credit unions. Focus on establishing relationships and then focus on working on your credit while you're building that relationship with that credit union. That is the best thing that you can possibly do. And do not bank with these smaller regional banks in your local area, because I'm telling you, we're going to watch something crazy happen across the United States where all of these smaller regional banks are going to take a massive hit. I hope you enjoyed this video. Make sure that you watch the next video, because it is about Capital One and how to get credit limit increase on your Capital One credit card. Now, if you felt that I brought you some value in this video, make sure that you don't forget and subscribe to increase your credit score.